greetings from Nairobi, Kenya. Fintechs in Africa are playing a pivotal role in reshaping the financial landscape. As a key driver of growth in the region, fintechs are a viable alternative to traditional banking in both the rural and urban areas. In Africa, fintechs create an enabling environment that opens up the financial sector's value chain and promotes efficiency. Across many countries in Africa, fintech is improving financial inclusion and stimulating innovation and productivity in major sectors, such as the micro, small, and medium-sized enterprises, as well as the agricultural sector, which are the backbone of the region's economy. Today, I'm honored to have a distinguished panel of industry giants join me to have illuminating discussions on navigating regulations affecting fintechs. You cannot mention fintechs in Africa without reference to Africa's largest fintech, M-Pesa, which is a Kenyan mobile money transfer platform that is essentially a branchless banking service. Mr. Isaac Kibere manages the legal and regulatory aspects for M-Pesa. He brings on board over 15 years experience in the regulatory and legal profession. Standard Chartered Bank is the oldest bank in Kenya, having been in our market for over 100 years. Mr. Peter Gitau is the Chief Operating Officer responsible for the bank's operations delivery in East Africa. He has held several roles in the bank and at one juncture was their Chief Information Officer. Mr. Michael Mbuthia is the project lead leading the development and implementation of the Rwanda National Digital Payment System. He has over 16 years executive level experience, which includes previously serving as the CIO and acting CEO for the Integrated Payment Services Limited, commonly referred to as PesaLink, that has been touted as M-Pesa's biggest competitor. Ms. Nanjira Sambuli is an internationally recognized and acclaimed researcher, policy analyst, and advocacy strategist who works to understand the intersection of ICT adoption with governance, media, entrepreneurship, and culture. She is a Ford Global Fellow, was a panel member on the United Nations Secretary General's high-level panel on digital cooperation, and serves on several boards spanning digital development, digital health, humanitarianism, science, and diplomacy. Nanjira, your presence on this panel ensures your stance against Mango's male-only panels continues to be upheld. And as Jabal previously said, my name is Mutheu Khimulu, and I will be your moderator today. Let's get straight into it. Over the past decade, Kenya has transformed into a technology epicenter largely propelled by fintech. This wave has been supported by various success stories, the most notable being M-Pesa, which is Africa's largest fintech and which disrupted the money transfer space globally. The agility of Kenya's mobile banking system has created opportunities for digital entrepreneurs. The penetration of mobile telephony and the receptiveness of the nation to technological innovations has placed Kenya among the top financial innovators. In fact, Kenya is ranked second in Africa after South Africa and closely followed by Nigeria. On the continent, Kenya leads in financial inclusion, closely followed by South Africa, Rwanda, Nigeria, and Uganda. Pre-M-Pesa, we had 23% financial inclusion, but now we boast 85% financial inclusion, predominantly due to M-Pesa. Isaac, how has M-Pesa been able to navigate and indeed contribute to the innovation of the fintech regulatory regime as a pioneer in this sector? More so as a fintech, which is essentially a branchless bank, under which regulatory regime do you fall under, and how effective has this been? Were there any regulatory challenges? And if so, how did M-Pesa overcome them?
Thank you. It's a pleasure to be on this panel, and also a pleasure to be invited by the organizers. As a way of a quick introduction, M-Pesa has always been managed and been supported by the regulators. At the onset, it is true we did not have any codified regulations. We did not have anything written down that could be referred to. There was a bit of a challenge in trying to get an understanding of what we were trying to do and what the product was meant to be. But there was a lot of support from our regulator, the Central Bank of Kenya. There was also a lot of support from the Treasury, the National Treasury. And this support enabled the service to start off, to grow, to have trust, because as you know, trust is key in any financial product. We were given a lot of support by these two institutions that gave a lot of trust in the product. And eventually, the practice and the kind of code that we had developed with the regulator was codified in 2014. And the national payments regulations were passed. Now, these regulations are what govern M-Pesa from 2014 up to the current date. But I can guarantee you that even prior to the passing of these regulations, we still had a lot of interface with the regulator. We had to seek approvals for any new products, as any traditional bank would have done at the time. We had to seek any approvals for any new pricing, any new type of service that we introduced in M-Pesa. So we're already used to the practice. But simply what happened in 2014 is we finally were put under a firm legal footing and fully governed by the regulations. And there's always been this perception that M-Pesa is ungoverned, is unregulated, and hence has been able to grow due to the lack of those restrictions. But I can guarantee you that it's because of those restrictions, it's because of those regulations that customers had confidence in the product, were able to use the product with the assurance that it's not something that you will wake up the next day and have collapsed. And so that assurance and that support that we got from our regulator has really been immense in the growth of the product.
Thank you for those profound insights, Isaac. And indeed, M-Pesa has grown because of the awesome synergy between you, the product, and the government and the regulators. Standard Chartered Bank was the first foreign bank to enter the Kenyan market and has been here for over a century. The bank has achieved a number of firsts in the market, including being the first bank in Kenya to be awarded the ISO 9002 certification in technology systems. The bank has been at the forefront of technological innovation in the sector. Peter, in many instances, fintechs operate under less stringent regulatory regimes than banks, such that when fintechs like M-Pesa disrupted the market, there was concern that they would kill the traditional brick and mortar banks, but they have not. The bank has remained competitive and embraced fintechs, even launching its Africa Accelerator Lab, an innovation hub that will serve as a platform to collaborate with fintechs in Kenya and the broader African region. How enabling has this regulatory framework been in permitting banks to embrace fintechs and work and or compete with them? Did you, as a bank, face any regulatory challenges? And if so, how did you overcome them?
Thank you, Mutheu, and good day, everyone. I think Isaac has touched on the regulatory framework around M-Pesa, which is also applicable to any payment service providers. I think there's always an argument in this space as to whether regulations should follow innovation or innovation should follow regulation, and I think it's somewhere in the middle. The answer to that question is that it's somewhere in the middle. If you look at what we are having in Afro-Asia FinTech, this is sponsored by our regulator, and I think this is a fantastic step in the right direction and a fantastic tone from the top that fintechs are here to meet some certain needs. Our regulators are there to support them, and us in the banking fraternity are also there to play in the same field. Mutheu, I love sports, and one of the things that I watch a lot is motor racing. And one asks the questions, why are the cars able to drive so fast? And the answer to that question is often because they have good brakes. So I think the regulatory environment that we have, whether that comes from the Central Bank of Kenya, prudential guidelines, and some of the other guidelines, like the cybersecurity guidelines that on our payment service providers, give us an enabling environment. As banks, we've We have guidelines on how to engage fintechs and other service providers, whether it's on know your customer controls, third-party engagements, etc. So they give us those breaks, so to speak, in that racing car, so that together in financial services we can move with speed. So I think there is an enabling environment. I strongly believe festivals like this, where we all come together, look into the future, reflect on where we are and what we need to get there, are quite key in banks and fintechs and the whole financial services sector moving forward.
Thank you, Peter. I love your analogy of racing cars. I'm also an ardent racing car supporter. And so, yes, indeed, the banks are moving at speed, but the regulator is there to help them put brakes. And I love the synergy between the market and the regulator, which is what is enhancing fintech advancement within the region. PesaLink is a payment system launched by the Kenya Bankers Association and is a digital solution which offers bank-to-bank transfers at a relatively low cost in Kenya. It has hastened interbank transfers. The governor of the central bank, Dr. Njoroge, has gone on record stating that prior to the launch, during his interactions with the PesaLink team, he impelled them to reduce their initial transfer time from 45 seconds to 10 seconds by the time they got their approval and were able to launch. This illustrates what we've been discussing all along, the great synergy between the market and the Central Bank of Kenya, with the regulator challenging the industry to produce better products for the benefit of its customers. Michael, you were the CIO and acting CEO of PesaLink from its inception, as it was touted as a revolutionary product that was gearing up to be M-Pesa's biggest competitor. As such, you have had colossal experience navigating the fintech regulatory sector in Kenya. Your current role in Rwanda as a project lead for the Rwanda National Digital Payment Platform gives you the added perspective of navigating the fintech regulatory regime in a neighboring jurisdiction. Can you enlighten us on the main distinctions in the regulatory regime in Rwanda? What one lesson can each jurisdiction learn from the other as regards fintech regulation?
First of all, thank you very much for that good introduction and the question as well, and for the opportunity to participate in the panel. I'll start with a fun fact. I think PesaLink was never called PesaLink from the beginning. It was called Kenya Interbank Transaction Platform. Not many people knew that, but eventually we branded it into PesaLink. And as you mentioned, it was an association-led initiative. And our single objective was really not to compete with anyone, but to address the objective of digitization and to reduce the usage of cash in the economy. And this granular objective was to provide an instant peer-to-peer transfer mechanism, account to account. And the example that you provided is very key, that at the point of going for a product approval, as Peter has mentioned, you have to go to the central bank for product approval. And during that time, we interacted a lot with the central bank team, who gave us a lot of support. And at that particular time, we had a transaction would take ordinarily around 45 seconds, as you mentioned. And I remember the governor saying, it's a fantastic product, but there is no way you'll send someone money and they wait for 45 seconds, waiting for the money to get to their account. That would create a bit of anxiety. And the challenge came to us was, can we reduce it? Indeed, we reduced it to, I think, 20 seconds. Went back from approval, he said, I think we can do better. And then we reduced it to 10 seconds, and then he said, I think now we can go to market. And from that illustration, it actually showed that the synergy between the regulator and the fintech is there. I think that the regulator, in my view, both in the Kenyan jurisdiction and the Kibere jurisdiction, usually look at three things. Number one is purpose. What is the innovation trying to do in the economy? They are very good to have innovation, but do they have an impact to the economy? And you need to demonstrate that to any regulator. And then point number two is robustness. Is a solution robust enough to handle a transactional load? I remember the question was, what if you get a flood of 1 million transactions on day one? Can you handle the load? And then the other point is payment finality. If you send a payment to someone, are you sure that that payment is going to get to the other person without any dispute arising? And then how fast can the transaction be executed? And then last but not least is just security and risk. Because what happens is that whenever you introduce a fintech innovation into the industry, you also introduce the good side of the innovation, and you also expose a bit on the bad side. And what all regulators want to see is that, have you covered your bases in terms of security? Have you audited your systems? Have they been certified to be, impregnable? Has the product addressed issues like settlement risk? Because at some point you're required to go to central bank to either do a settlement, a net settlement at some point. Have you addressed this kind of settlement risk? So for me, from my experience, I would say that regulators in any jurisdictions, whether it's in Kenya, whether it's in Kigali, look at those two things: purpose, robustness, security, and risk. But having said that, I think working with all the regulators between Kenya and Tanzania, there is always an overwhelming support to support fintech. So I've witnessed it personally, and we've rolled out Pestilence in Kenya, and at this particular juncture, we're almost rolling out the Rwanda National Digital Payment Platform, obviously with the support of the regulator. Thank you.
Wow, Michael, thank you for those interesting and informative insights. And there seems to be a common theme flowing here, that for the fintechs to succeed, there has to be great synergy between the regulators and the markets. Well, moving on, COVID has been a disruptor of the most unprecedented nature in recent times, as it's not only a public health concern, but it has also adversely affected the bottom line of many due to the high level of job losses and business closures during this period. This has resulted in a surge in borrowing from mobile loan applications. In fact, the pandemic drove Safaricom's Fuliza loans to R1 billion daily in the first half of 2020, when the government of Kenya imposed restrictions to curb the spread of the virus. The loans on the platform in the 6 months to June 2020 hit 176 billion, which translates to an average daily borrowing of about R1 billion. This is a significant jump from the 81 billion Fuliza loans in the same period last year. Nanjira, as much as the fintechs have enhanced financial inclusion, financial literacy amongst the population is still a huge challenge. As such, with the easy access to digital loans and harder economic challenges, many borrow with little to no understanding as regards the interest charges and the consequences of their default. Hence the surge in digital loan borrowings due to the COVID disruption. What is your perspective on how we can better regulate this challenge, which has a domino effect on the financial stability of an entity or a person? Alternatively, do you think it's adequately regulated?
Thanks, Mutheu. And finally, we get to the part of the conversation where we bring in the tech. So, with regulation and regulators, we have a core yet sometimes overlooked function that is consumer protection. And this can be interpreted to, among other things, entail consumer awareness. So here we'd be talking about literacy components at this intersection of digital and financial. So on the tech side in Kenya, we have the Kenya Information and Communications Consumer Protection Regulations 2010, which affirm consumers' rights, such as to receive clear and complete information about rates, terms, and conditions for available and proposed products and services. We also have protections around personal privacy and protection against unauthorized use for personal information and protection from unfair trade practices. Arguably, these rights are not well protected nor sufficiently regulated through the implementation of fintech products and services or through legal enforcement of such regulations. And the demand for data that fuels a competitive edge for fintech products does lead to a scenario where these consumer rights end up being afterthoughts on the product side. You have also this popular parlance that has been alluded to already about not punishing innovation, such as in fintech. Yet we also must ask at what cost, considering the effects and the numbers you just cited, where we're seeing that the absent motivation for self-regulation.
Nanjira, can you hear us? We seem to be having a technical challenge. As we wait for Nanjira to come back and join us, why don't we move on to my next question? My next question is being addressed to all the panelists. As a cybersecurity lawyer with a previous central banking regulatory experience, I can with authority say that as regards fintechs, regulators find themselves in an ambivalent position in which they want to promote and support financial innovation to harness the benefits, while keeping an eye on the emerging risks that come with new business models. Cyber attacks are a growing threat to the entire financial system, and fintechs could serve to accentuate this risk. The susceptibility of financial activity to cyber attacks is likely to be higher the more the systems of different institutions are connected, amongst which there could be a weak link. More so, as currently approximately 98% of all banking transactions in Kenya are now digital, therefore making them more prone to cybersecurity risks. In my opinion, cybersecurity needs to be a pivotal mindset across all spheres of business and all regulator strategy, as studies have shown that on average, a cyber breach occurs every 39 seconds, and 43% of the cyber attacks target the small businesses whom fintechs seek to empower, and 60% of small companies go out of business within 6 months of a cyber attack. In Kenya, as indeed in other global jurisdictions with data protection legislations, these contain stringent penalties for the violation of privacy rights. And we all know that cyber attacks intensify privacy violations. There is indeed a need to ensure cybersecurity takes precedence in the boardrooms. From your perspective, Mr. Gitau, how effective do you think the existing fintech cybersecurity regulations are, and what can be done to enhance them?
Thanks, Mutheu. I think with cybersecurity, I think the phrase that we are as strong as our weakest link is probably the best way I'll describe it. So one of the key things that the cybersecurity guidelines for payment service providers ask for is one, ownership at the board of directors, and that begins to set the tone at the top. I think that within that's a very strong requirement, which then ensures that if board members are held responsible, then they're able within the organization to make sure that the right attitude and the right controls exist around cybersecurity. And that trickles down to senior management and to everyone within the organization. I think the other issue is awareness. The guidelines require us to continuously, educate our staff, our clients, and our service providers on cybersecurity. And I think the more we talk about this issue, the more we share information, the more we make sure that everyone in the society understands what cybersecurity risks are and how to mitigate them, the safer we become. So in that, to that extent, I think the guidelines are very strong. Create the right tone from the top and push for awareness. I think the one area that has come after is on data protection. And I believe that's an area that we need to keep an eye on. There are data protection regulations in the country. There are consumer protection regulations. I believe we need to spend a bit more time on that as far as cybersecurity is concerned. Some of the most recent cases that have happened globally around cyber breaches have been on data. So our understanding of how to protect the data we hold, how to move that data around, I think is an area that we need to pay more attention to.
I couldn't agree more, Peter. Michael, what's your take on the existing fintech cybersecurity regulations, and what do you think we can do to enhance them?
Thank you very much for the question. I think just to name a few of the regulations and to piggyback on what Peter has mentioned, we have the cybersecurity regulations that have been published. We have the central bank prudential guidelines. We have the data protection laws. So in terms of the regulations themselves, in my view, I think we have very, very robust regulations that protect the citizens on how to interact with digital platforms. However, the fact is that fraudsters follow where the money is. And right now, money is flowing digitally because before COVID, we would actually carry a lot of cash. Post-COVID, everything is digital. So we find that a lot of fraudsters now are making a lot of skill in terms of defrauding customers. However, the challenge has always been not the regulation, but the end users, as Peter has mentioned, because we find that as much as we have a regulation, the end users are not aware of the challenges that are currently there on using digital platforms. So for instance, sharing sensitive information or entering password and insecure platforms. And I believe over and above the regulations, what the industries have done, let's start with the banking industry. In Kenya, they've initiated a car changer initiative, which is more of an awareness campaign to enlighten users. When you're keying in your PIN, make sure that you protect it. When you're doing a card not present transaction, which is actually an online transaction, you make sure that there is a padlock on top of the website, which shows that the website is secure. But also on the telco side, there's also initiatives that have gone towards helping end users. For example, the SIM swap confirmation, every time you swap your SIM, you now have to literally confirm that you're the one swapping the SIM. Otherwise, the SIM swap will be declined. So I think the regulations are just fine. I think what needs to be done is more awareness, like the transgender initiative and the telco SIM swap solutions, just to reinforce the regulations that are currently there, and also just to reinforce and possibly get astute lawyers like Mutheu who would educate our legal practitioners, because most of them are very knowledgeable in normal legal matters, criminal, conveyancing, land issues, but there are not too many cybersecurity lawyers like yourself. So I'd encourage you to create a community of lawyers like yourself to support the code of law.
Thank you, Michael. And yes, that's part of the reason why I've returned home. I've just recently returned from the US because I'm passionate about cyber law and I want to build that field here. And your points are really valid. Nanjira, sorry we lost you, but you're back with us. So what's your take on how effective you think the existing fintech cybersecurity regulations are, and what do you think can be done to enhance them?
Hey, thank you for having me jump right back in. Well, with cybersecurity law, one thing that we are going to have to get comfortable with is that digital is permeating everything. So when we talk about cybersecurity, we have to think of whole of government, whole of ecosystem approach to that. And so for that, with any law or regulation that we'll have around cybersecurity, preventive strategies will be key, over and above just always reacting to the event. And this also extends beyond technical aspects of like HTTPS that was being alluded to. We have to look at what are the socioeconomic motivators for folks to engage in cybercrime. And if you look at how it's playing out in Kenya, for example, you have to sort of have a hard tip to it with the innovative side of it. So on the flip side, we have to think of it as employees waiting for opportunities to actually, whether it's bounty systems or actually the people who should be hired to think about, how to secure the systems as a first line of defense. If we're going into a future where security practitioners, so cybersecurity practitioners in this regard, will be just first line defenders, the same way we'll need lawyers and other technical people to do. So we need to start adopting a creative way of thinking about the laws and guardrails we're going to have. And a good analogy there is a set a thief to catch a thief that we might need to start embracing as we think about migration from reacting to being proactive in our enforcement of cybersecurity.
I love that. You send a thief to catch a thief, and which is why it's amazing with all the hackathons that we're being hosted on the continent. We're getting the skill sets being spread out so that we can learn how to catch the thief, not to become the thief, but how to catch them. I also love your reference to HTTPS because the consumer is becoming more aware. And if your website is just HTTP, nobody's going to come to you. They're going to go to the more secure website. So yes, indeed, those are really good insights. Isaac, what's your take as our largest fintech legal regulator? on the cybersecurity regulations and what can be done to enhance them?
Thanks, Mutheu. I think Peter really hit the nail on the head in terms of policy. We have the regulations, we have a lot of circulars that have been issued by our regulator, and we also, on an annual basis, share our cybersecurity audits with the regulator. So, from a policy perspective, a lot has been done by our regulator, and I believe it's comprehensive. Michael mentioned something very important, which is awareness for our consumers. Because you may have a lot of preventive measures applied at the back end, but if at the front end level the consumer is not fully aware of how to protect himself and to secure his financial transactions, then you then have a big gap in terms of implementing cybersecurity measures. For me, I think the biggest gap we do have, not just in the sector but as a country, is the fact that we don't as yet still have adequate criminal sanctions for cybersecurity offenses. So there was a bill that was passed and passed by our parliament, but it had some issues and has been blocked in court. But I think it's about time we look at that bill, have it passed fully, because right now it's when you look at the risk-benefit analysis of becoming a hacker. There is an element of you taking that risk because there are no adequate sanctions applied to you when you're caught. So you tend to be charged with traditional criminal offenses that are not very adequate to cover the kind of offenses we're seeing within the cybersecurity space. So I think it's important we cover the policy, which we have done very well. We educate our consumers, but we also have a situation where you have adequate sanctions against those offenses that are committed within this sector.
Isaac, I couldn't agree more in terms of having the cybersecurity legislation in place, because cyber criminals don't stop working just because we don't have the enforcement arm to stop them. And so, yes, we do need to speedily ensure that is in place. But even with that, one of the biggest challenges we have in cybersecurity from a legal perspective is attribution, because traditional criminal law cannot apply in the cyberspace because attribution is a challenge. It's a challenge that's slowly being overcome, but it's still a challenge. A cyber criminal could be anybody with a keyboard and access to the internet. Okay, now to move along, in both Kenya and Rwanda, as indeed across most global jurisdictions, since fintech products and services cut across a number of sectors, it's difficult to assign them to a single fintech regulator. This multiplicity of regulators, coupled with overlapping responsibilities and authority, may lead to inconsistencies. For example, in Kenya, the regulation of virtual currencies has exposed the different positions taken by different regulators regarding the issue. The CBK has warned the public to desist from transacting in Bitcoin and similar products. And the Capital Markets Authority has adopted a more fintech-friendly approach on this issue through the establishment of the sandboxing regime. I know we also have the white sandbox at the Ministry of ICT. But from your perspective, how best can we navigate this regulator fragmentation and resolve it? Nanjira, we'll start with you.
Sure. For governments, as we really truly enter a decade of digitalization where those lines will be blurred and sectors as we've known them in the past will first have a fundamental definition in digital, they will have to rethink and restructure how they perform certain functions, because for sure we do need the public sector to come in a proactive way, but in a whole of government way, so that even if you're dealing with digital and finance, but in a health sector, you will not be dealing with these inconsistencies. So there's an urgent need for governments to take a step back and reorganize for the digital age. And that will also mean that, the competition that we're seeing across sectors is addressed, which is a deeply political issue too. But it has to be, one way to future-proof it is to think about even other security challenges that will come beyond what we're thinking of cybersecurity with stuff like unintended inference from the data that is being generated. How do we make sure that we have across the board health data being regulated in a way that it doesn't affect financial data? We don't end up in a situation where attribution, as you're talking about, is not just about whether we can find the criminal, but how a fintech company figured out that based on my health data that was leaking somewhere, I may be a credit risk. These are the real questions that should get governments to think differently and to make sure that we can start having a decade as we move forward where we're maximizing the benefits but minimizing the harms in digitalization, and not having the classic, government is always behind or regulation is always behind innovation.
Thank you, Nanjira. Your points are really, really valid. Michael, what's your take on how we can navigate this regulatory fragmentation, and how do you think we can resolve it?
Good question. I think just to take a second to just talk about sandboxing. I think sandboxing is a very good way of allowing fintechs to test out technologies before they go to market. Because ordinarily what is happening is that fintechs are actually testing in their own environment and then coming to approval and have to go back and do an iteration. But if really there is a sandbox where fintechs can play in and develop and then proceed to product approval, I think it will give a faster go-to-market for a lot of fintech products. And just to mention, in Kigali, Rwanda, I think Central Bank Rwanda is one of the central banks that actually has a sandbox for fintechs where they can develop and get approvals out of that. And maybe I would encourage other regulators as well to think about it. The sandboxing currently I've seen in Kenya is slightly fragmented. We have one for capital market authorities, but those are for the financial and capital markets regulators, not necessarily for fintechs. Fintechs are developing for banks or for telcos. And as such, I think there is a need to have, a super sandbox where if you need to develop a product, you can be exposed to it and develop and then showcase it on that particular platform, like what you're currently doing on the hackathon in this particular Singapore festival. But just to speak slightly on the overlap and the regulatory segmentation, I think for me, you need to understand who your regulator is, because I think the understanding of who your regulator is removes the overlap that is currently there, the perceived overlap. So if I'm a fintech and I'm developing a bank-related product, it goes that my regulator is central bank. As such, I will go to central bank for a regulatory approval. However, where there is no such understanding, you find that innovators will put their proposals and move from one regulator to the next, and the regulator will say, listen, I'm not a regulator, go to this regulator. So it starts with understanding as who is my regulator, who am I supposed to get a product approval from. And once you get that right, there is a matrix around how you develop a product and you get it approved. And for me, I can say it's usually very straightforward at the beginning to understand what are the requirements, but once you get the understanding, it's usually a very easy process for me, because for instance, in Centrelink, we managed to get 33 banks approved to be onboarded on Centrelink, and they all went through the central bank approval process. And I think it went very well because we understood who regulates what are the requirements. So I think that's really how I can address that particular question.
Thank you, Michael. And indeed, sandboxing may be a way for us to seriously consider moving forward as a viable option. Isaac, what's your take on how we can navigate this regulatory fragmentation and resolve it?
Thanks, Mutheu. I think I'll take a contrary view. I don't believe we have a fragmentation with our regulators. Probably it's because I interact with them a bit more on a daily basis. But when I look at how the industry is right now in terms of the financial services regulators, there is a lot of partnership. Recently, they actually issued a circular jointly around the frauds that are coming up in the digital financial space. And this involved SASRA, it involved CMA, it involved the CBK, and they were able to reach out to each of their licensees to guard against this kind of fraud that are becoming prevalent in the industry. Secondly, M-Pesa was a sandbox in 2007. And it was a sandbox in an environment where there was no regulatory, there was no regulatory guidance on how to undertake this. But the regulators at the time sat together and came up with what now we have right now. And Michael mentioned something very critical, that when you're rolling out a product, that product should cross-cut against several regulators. For example, if you're rolling out an insurance product that is using M-Pesa as a payment channel, you would then have to go have a discussion and the central bank for them to understand the product, because each will look at each product based on different risk parameters, and there's an appreciation that the insurance regulator will have more expertise, whereas the central bank will have also expertise around that area. So I believe the regulators are working together. We are seeing that more and more. Could it be better? Yes, maybe there's always room for improvement. But I do not see them contradicting each other as I have seen in other jurisdictions. In other jurisdictions, you see a scenario where the primary telco regulator having an issue with the financial regulator in terms of regulating mobile money, and you have a conflict in those two areas. So in Kenya, we have been we've had a better situation, and we've not had that kind of a conflict. But as you rightfully say, there is room for improvement.
Brilliant. Those insights are really, really informative. We're running out of time, and I know there's some questions coming in. Mr. Gitau, before we start taking the questions, what's your take on how we can navigate this sector of the different regulators and the different policies, and how can we best resolve it?
I think what has been said before is very true. Asking for everyone to take a step back and look at the environment, look at what has happened to us during COVID. I mean, we've been disrupted. The reason we're having what we're having today, I think a year back we would have met physically. So there is, I would not say it's fragmentation. I think we're in a journey. We're going through a journey. There are opportunities for improvement. There'll always be opportunities. But I find that our regulators actually talk a lot. Michael made a good point. Who is your primary regulator? I think if we all understand that, and we are all aligned there, and everyone is taking a step back to sort of look at the new normal, so to speak, we are in with fintechs in financial services, I think we'll get there. I see it as a journey, and perhaps the word fragmentation is a bit harsh. So I see it as a journey, and I think things will slowly come together where they need to.
Indeed. In fact, I was using the word fragmentation in inverted commas. So yes, it's not to be that harsh. But I hear where you're coming from about having a primary regulator. In fact, we have a question that's come in, which I'm going to throw out to all of you. It's what's your view on having a regional regulator to support fintechs across border expansion and operations? And I'll open the floor to whoever wants to give it a shot first. Nanjira, I see you smiling, so you want to give it a shot?
I'm reflecting on it in terms of the things that sound nice on paper, but we know that the practicality of it is an uphill task. I mean, in any other sector, whether it's just finance alone or even ICT, where they tried to do cross-regional in East African community, for example, we've ended up with the documents, but the implementation has been a challenge. And, you know, with digital, what's going to be fascinating is its trans-border nature is going to necessitate that we figure out regional collaborations. But I think, to borrow Peter's language, is that it's a journey. And in this case, it's going to be a political journey.
Yeah, indeed, it's a journey. And I like the point about having that whole international sharing of information, because what's going to happen, especially with cybersecurity, cybersecurity risks which come with the increase in digitalization are not confined to your area code. It's literally the www, the World Wide Web, wherever it is, the risk can be from anywhere. We have another question that's come in. It's from Marianne from Kenya. She asks whether there is a regulatory portal that can be a point of reference for fintechs worldwide, especially since most fintechs serve markets across borders. Isaac?
Yeah, I think that's a good idea. We don't have one that I'm aware of, but that's an area where, especially for a lot of innovators and new startups, they have a challenge in understanding what do I have to adhere to, where do I go for a license, and at times they get caught up with crosshairs by regulators because they may commence operations, they haven't gotten the right authorizations, and then they land themselves in a situation where they're being banned from offering services. So in Kenya, the central bank does provide a lot of guidance around that, and there is a specific division within the bank that manages fintechs. But as the participant rightfully points out, there is no central place where I'll get guidance. If I'm doing this kind of a product, what do I go and get so that I can then offer this product to the public? So the only probably best solution I would give is always consult a lawyer, and
Yes.
Lawyer will provide guidance. And there are many lawyers who now are supporting players in the fintech space, so the expertise is there.
Brilliant. We have the last question is from Esther from Strathmore, and her question is, what is the best way that the regulators can assist fintechs? And I'm going to throw this question to both Peter and Michael. So Peter, you want to start?
Okay. I think one of the ways is what we are doing today, providing a platform where we have conversations around what's going on in the fintech world and what's going on in the regulatory world. I think this kind of forums are very, very helpful, and regulators taking taking actually the initiative to do this is good. The other one perhaps is we do have, as Isaac has said, within the central bank, people who deal with fintechs. I would imagine that would be the same within the communications authority, etc. So if we have a framework, because it's very difficult, there's no one size that fits all. So I may be doing a certain innovation which requires a communications authority sort of approvals. I may do something that requires another capital markets authority. So we developing the skills and developing frameworks around engagement with fintechs, I believe, is the one way that regulators can help.
Indeed, fintechs are so diverse and so broad in their spectrum. Michael, what's your view on the question from Esther? What's the best way that regulators can assist fintechs?
I think first to say thank you very much to Esther for the question. What Peter has mentioned is actually correct. What we're doing is unprecedented. I remember the first Croatia Fintech Festival that was held, I think, last year. That was the first in the region. And this is one way of, pushing the envelope forward in terms of supporting fintech. But as well, again, just to go back to understanding the regulator, if really you're developing a product, and the principles are, you need to have proper steps. What gap are you trying to address? Are you trying to address a gap in the financial services market? Are you developing a product for the financial services? Then you proceed to the regulator. And under the regulator, there is a department that largely deals with payments. So there is a payments department led by, I think, a lady called Nita Omanga, who is a participant in this corner. So you proceed to that department, showcase your proposal, and if indeed it's a viable proposal, they have mechanisms of pushing it forward. So if it's a product on capital market, you then proceed to CMA, and CMA has a department that will evaluate and appraise the product. So I think the first thing is principles first. Know what you're developing. Does it address a gap in the market? And then understand who your regulator is. And then once you do that, then you approach them, because regulators are human beings like you and me. And they're approachable. They pitch and listen whether they'll buy it.
Thanks, Michael. Yes, and indeed, regulators are very approachable. And indeed, we're very lucky in this jurisdiction that we have great synergy with them, and they're really supportive for viable innovations, so long as they're to the best interest of the citizenry. Ladies and gentlemen, I thank you for these most informative and engaging discussions, which we could have had for hours. I mean, it's really interesting. But sadly, time is not our friend today. And I now hand the platform back to our amazing MCs and television anchoring giants in Kenya, Yvonne and Debal. Thank you.